Hey guys, what is going on? Welcome into the video. So we had another very strong week in the stock market, and in this video we're going to be going over what to expect next week, including a very important catalyst coming up. Along with that, we're going to be going over some trade ideas for the week ahead. Let's go ahead and get into it, and as always there are timestamps in the description. So during this uptrend for months now, we've been going over how important it is not to fight the trend. A true pullback only happens once a key support breaks and holds below, which we have not seen for months now. And it was the same story this week. On media and news sites, there's always fear-mongering, but price is the only thing that pays, and buyers continue to be in full control of the trend. So this week's action on the S&P was characterized by two simple bull flag breakouts. Price consolidated on Monday and Tuesday, it broke out on Wednesday morning, and then consolidated for the second half of Wednesday and all day Thursday, before breaking out of that bull flag once again on Friday morning. There's nothing complicated about this, it is just simple price action, and the more simple your thought process is trading, the more money that you will make. So the key levels to watch on the S&P futures into next week is now 50.48 resistance, and then key supports at 50.20, 49.98, 49.57, 49.34, 48.98, and 48.73. I would consider 49.98 and 49.57 as the most important levels to hold to keep direct upside in play. Breaking below 49.98 could start a decent pullback into the previous range, but in the bigger picture, as long as it's above 48.30 to 48.41, which was the breakout out of the multi-month inverse head and shoulders pattern, buyers have full control of the large time frame trend above there. And the important catalyst to be aware of this week will be the CPI report on Tuesday morning. There's a lot of data out there signaling that inflation is headed down in a big way, so we have to think that the market is expecting a low number, which will be bullish. That being said though, the market will need at least a healthy pullback soon, which I would be potentially watching for at CPI. I could see a scenario where something like this plays out, where the market consolidates on Monday, and then if there's a bullish CPI number on Tuesday, get a big pop up to 50.80 to 5100, which is a zone that I'd be watching for sellers to potentially come in and start that pullback from there. And I'm not saying that I would be shorting or trying to call a top here, it is just something I would be watching for. There's a concept called the right side of the V, and full credit to Lance Breitstein for this. Trying to call tops and bottoms in the market is a loser's game. Just ask anybody who has tried to call a top during this rally, but waiting for the trend to change and then entering once momentum is on your side will limit your risk and give you stronger conviction on the trade. So for example, if I think the market may have topped on Friday at 50.48, it would still not be smart to short here. But if this scenario plays out where it pops on CPI and then sells, I could wait for that to play out and then short the S&P on a failure back below 50.48, which would be a false breakout, and I could limit my risk by having a stop loss on a reclaim and hold back above 50.48. This is a very simple concept overall, but an effective one. Too many of us get caught up trying to call tops and bottoms. Just keep it simple and trade with the trend. Once the trend changes, you can trade that direction as well. And if there was an initial sell on CPI, I would not be surprised at all to see that dip get bought up, so certainly be open to all scenarios. But now getting some trade ideas for the week ahead, starting out with a few that we went over last week. First is Mongo DB, ticker symbol MDB. Last week we went over the multi-year cup and handle pattern that was on the verge of a large breakout, and this played out perfectly, running all the way to $500 per share. Now it may see a pullback or some basing next, but this looks to be headed higher with the next target levels above at 515.5, 526.85, which is also a gap fill, and then 570 to 590 above there. Another one that we went over last week was Snowflake, ticker symbol SNOW. We went over how this was starting to break out of a 2-year long consolidation period if it held, and it did so perfectly last week with great follow through into the 230s. Like MDB, we could see some basing or a pullback next, but this is looking set up to move higher with the next targets above at the 250.65 gap fill and then 269.6 above there. And another one from last week was Google stock, ticker symbol GOOG, which we talked about how the gap down on earnings was very similar to what played out last October, and to watch for this dip to get bought up. And that is exactly what happened and is now closing in on the earnings gap. The next targets above to watch on this are at 152.1 and then the gap fill from earnings at 152.77. So now getting some new ideas that I'm watching for, starting out with Shift4, ticker symbol FOUR. The stock has been consolidating very tightly for about 2 months, and it feels like just a matter of time before it sees an explosive breakout move. So I'd be watching $79 per share to act as a potential breakout trigger on a break above, which above there would target 83.65, 86.48, 90, and then 99.15. And another one to watch is GLBE, ticker symbol GLBE, which is currently breaking out of a tight 2-month-long bull flag. So the trend line at about $40 per share now was the breakout trigger, so it's key to hold above that level as support to keep this breakout intact. And if it's able to do so, this is an explosive look for a move higher. The next target levels above to watch for are at 45, 49.7, 51.2, 55, and 57.74. And one idea to watch for those who like dip buys is Snapchat, ticker symbol SNAP. It's always the same story with this stock. The company reports terrible earnings, the stock has a huge gap down and sell following those earnings, and then that dip eventually gets bought up and runs higher until the next earnings report and does it all over again. And I mark each time this has happened in the past couple years with those arrows. So the key pivot level that I'd be watching on this is that previous gap fill at 11.43. Zooming in on the chart, we can see that this level has been well respected since that gap down. So to trade this, it's important to keep risk very tight since it's a falling knife and it could easily head much lower. So two ways to trade this into next week is first, you could attempt an entry at current prices and play it with a stop loss below lows at 10.82. So you'd be risking a little bit less than 3% and your stop out would be if it makes a lower low. The second way to trade this is you could wait to see if it's able to reclaim and hold back above 11.43. And if so, enter it and play with the stop loss back below 11.43. And if it's able to do so, the initial target levels above would be at 11.85, and then the key pivot zone above there at 12.9 to 13.9. So very favorable risk reward as long as you keep risk tight. So that is what I'm watching for in the week ahead. This is a week that I would be a little bit less aggressive because there is that chance we get that market pullback, but take it day by day and level to level to see how the market reacts. Thank you guys for watching, and for anybody interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts, nightly watch lists, and answer any questions you have in there. Thank you guys for watching, and I will catch you next time. Good luck trading this week, and peace out.